Good evening, ladies and gentlemen. Welcome to our weekly investor update. My name is Dan Theok, SVP of Investment Banking, and I'll be your host for today. First, I'd like to say what a pleasure it is to be here. As you know, our weekly investor updates keep investors and the general public up to date with what's going on with the local and global markets. Today will be a little different as we'll be bringing you our quarterly review. Investment advisors Brandon Thomas and Justin Scott will join me for today's discussions. If you're familiar with Justin and Brandon, then you know they will add value to today's platform and discussions. Brandon, Justin, welcome.
Thanks, Dan.
Always a pleasure to be here.
Great. So if you're a fan of the content, then don't forget to subscribe and hit the bell to stay up to date with the channel. We upload content just like this every week. And that's why if you're looking to embark on your very first investment journey, you should take that very first step with Mayberry. So follow us on social media at Mayberry, INVJA, to learn more about how you can get started today. Great. First up, we're going to try to cover 6 companies today. So it's going to be tight. First one will be Wigton, and I'll kick that over to Brandon.
Thanks, Dan. So Wigton, everybody, is a company who generates and sells electricity to JPS, coming from wind technology. And they're a company that listed in 2019, massive IPO. And we're here to look at how they've done in the last and the most previous quarter. So that is the June quarter of 2022. We see where they have increased their revenues by 25%, up to 794 million. And we have also seen where they have cut expenses, so the cost of sales is lower. Their general administrative expenses are lower, and that now has obviously boded well for their net profitability, where that has increased by over 83%. We see where they're sitting on total assets of over 11 billion, and at the share price that is currently trading at 54 cents roughly, that gives us a PE of about 10 times. So definitely undervalued, and a stock that has huge potential once we, as a country, start to use more and more green energy and so forth. So they've increased production, and as we move on to the second slide, we see the quarterly profit movements, and it has been a bit haphazard due to several reasons, such as wind speeds and operating capacity and consistency of that. But overall, we have seen a certain level of consistency with certain quarters and how profitable they are, especially Q1, and which is the quarter that we're referring to right now. And according to management, in the continued implementation of the company's diversification plan, Wigton is aggressively exploring business opportunities and partnerships to achieve this objective, right? This objective meaning that they want to now diversify away from just wind technology into other green energy solutions, which I'll get into a bit more. As we move at the share price movement, we see where we saw a high year to date of about 77 cents in and around March, thereabout, and now it is trading at about 54 cents. So the stock has definitely gone back close to the IPO levels, but we do expect this stock to move over the long term, as I said before, as the government gives more requests for proposals and more expansion and diversification comes out of Wigton's plans. Speaking of those plans, we see we're at the top of the year. They entered into a financial advisory service agreement with us at Mayberry in order to help them with business development and certain expansion activities. And we see where immediately after there was an announcement of a 21% stake in Flash Holdings Limited, which is 100% holder of Flash Motors and has a partnership with Stewart's to distribute BYD vehicles, which has a lot of potential actually, because BYD is the largest EV manufacturer in the world. They have the largest variety of vehicles, everything from small hatchbacks to large trucks and buses. So, when I think about some of the announcements coming out of the government that they want to change some of the fleet of vehicles to EVs, this could bode well for Flash Motors, where BYD already has the stock to provide JUTC trucks, different type of police vehicles, everything can be supplied by BRD. And if this potential is tapped into, obviously this would bode well for Wigton, who has a stake. We also see where they entered into a joint venture with IEC, and they've already done a project at the Normal Mali International Airport, where they built a solar project, and they have more joint venture projects with IEC on the way. So this is, a couple of examples of how Wigton is diversifying, which, bodes well for the future profitability of the company. So very exciting times for Wigton. We can look out for about 2 years from now, when that 10% shareholder limit is lifted, and that could open up to where larger shareholders can take a much larger stake in the company and driving that share price forward. So Wigton, I have it as a long-term buy, and I expect great things from them in the future.
Excellently put, Brandon. Absolutely correct. Absolutely agree with you right there. We really want to see Wigton moving away from having just a perception of being a solar wind farm, right, and generating wind energy, and moving further into the light of being an alternative energy providing company, right? As I said before, the 21% acquisition of Flash Motors, the photovoltaic project that we're working on with Normal Mali International Airport, and if more that we really step into these projects, getting more approvals, putting up more bids, and getting all of these different businesses, right, is the more they can step further into that light, and then even working towards getting international companies to work with Wigton so they can get more of these green energy credits that can provide a lot more business for them. So it really opens up a lot of opportunities for them, especially as we can see that this government is actually actively working towards the green energy mandate that they have stated from before. You probably would have seen the news earlier that the Mona Dam is going to be used to generate energy, right? So they're going to be having a solar panels floating on the Mona Reservoir, right? So they're getting very creative. They can see a lot more things happening. And so with continued efforts by the Wigton board and the government, we should be seeing a lot more growth in Wigton coming soon.
Thanks for that, gents. And if I don't say too much, it's because I'm conflicted. I'm a board director of Wigton, but what I can say, certainly in the public information, is you don't see very often a company with $6 billion market cap and $4 billion of cash. So I think great opportunities there for Wigton to go out and do projects, win projects, and continue their expansion program.
Sure.
Good deal. Let's keep it moving. Up next, I'd like to do Supreme Ventures Limited, and that will be presented by Justin.
Okay, guys. So Supreme Ventures, as you know, it is a gaming company, right? So they do lotto, they do sports betting. They also provide PIN codes to the various communications companies we have out here in Jamaica, right? And so what they've really been doing right now is, because we've already spoken it before, we love Supreme Ventures over here. We really are focusing a lot more on the development of the technological factor that they have down in Supreme Ventures. Just recently, they received the GLI certification. That's the Gaming Laboratories Industry certification that has certified their mobile gaming application and software. It's actually one of only 2 companies within the entire region that has the certification. So that provides now an opportunity for them now to provide their platform to other operators within the region. It allows them to really step up the certifications and the operations from them, right? So we're going to be seeing a lot more development towards that angle, because that was totally scalable. You can apply that within Jamaica, obviously, sure, but the applications for that within the region, and then even further from there, as we've seen them been doing a lot more, shifting your focus to even going out to Africa, right? Just recently, actually, the Supreme Ventures team would have met with the National Lottery Association of Ghana. And so what that's been doing now is it's providing opportunity for them to, they've really been sharing some of the information they have, sharing their expertise, and perhaps even provided some room for collaborations, right? So Supreme Ventures now has been having a spectacular year. We can see that over just the 6 months, they've done $25.4 billion in revenues and $1.6 billion in net profit. And that was just in 6 months out of the year. So we should be seeing probably one of the best years in Supreme Ventures history by the end of this year. right? As we can expect, for those of you guys who really love the dividends out there, the more profits they have and the more expansion they do is going to be a lot better for you guys. So we can expect perhaps another great dividend coming in Q4. Even further from there, we've been seeing a lot more developments of them. Supreme Ventures is a company that does have quite a large cash balance because it's the type of company that really takes advantage of the situation, right? So over the course of the last couple of years, we've been having quite a few situations, really the pandemic. People have been looking for a bit more of the release, somewhere to really try the luck, right? And that's what Supreme Ventures is really offering to. It's an opportunity to try a luck, to really step out and make use of the enjoyment and entertainment. And that's what we're providing to people, to the point where they've even been increasing the payouts, right? We could see that from Scratch has increased the payouts for about 19% over the last fiscal year for them. So they're really not just taking the money, but they're actually providing back and forth to them, right? So it's heavy cash flow, great company, a lot more revenues from the gaming operations, as well as their subsidiary Michaela Financial, right? So while Michaela Financial may not be moving the needle presently, with the situation in the universe of microfinance in Jamaica shifting with the BOJ's regulations, right? I'm assuming it's going to be certified coming soon, and then they can really start stepping up their operations even further from there with such a great backer that Supreme Ventures is. And we may be seeing more on the mergers and acquisitions side of things further from that, depending on how the board is feeling, depending on how negotiations we're having, because a lot of these deals are taking place in the back room. So let's see how that goes from there, right?
All right, Justin, couldn't agree with you more. My excitement about SVL is how they have now branched off into not just being a gaming and lottery company, but they've gone into finance heavily through Michaela, and we've seen they've taken a stake into Kia World, which is a regional financing company, and they've also gone knee deep into entertainment, where they've taken a stake into Main Events, who, by the way, just put out their best quarter ever, and they have a joint venture production company coming with them, where they'll be building out the space at Caymanas, and start putting on events and hosting events. Caymanas also went into an agreement with Choco Cove, and there's a lot of potential in the different segments of SVL. So I expect big things from them coming.
Absolutely, couldn't agree with you more. And my job is to just keep declaring the conflict. So we are a top 5 shareholder at Mayberry, and we do through our CEO have the executive chairmanship at SVL. But our review here is independent of that. It's a great company, and we're expecting bigger and better things from them going forward. Okay, up next, NCB. So we want to look at the 9 months ended June 2022. There's not much for me to say about NCB. I think we all know it's the largest bank in Jamaica, perhaps the second largest in the region. And when I say largest bank, I mean by a stretch. There was a time when you used to compare NCB to like Scotiabank, for instance, guys. And when you look at the trailing earnings of NCB, it's now $23 billion. Scotia's trailing earnings are under $10 billion. So yeah. NCB is now almost 2.5 times bigger than Scotia. Next closest thing to them would be like Sagicor Group with trailing earnings of $18 billion. Then JMMB with trailing earnings of $12 billion. So it's really hard to bet against NCB. It's a great bank. When I look at where the stock price is trading, it's kind of like at a 4-year low at $90. I mean, this is a stock that was sitting at $150 for a very long time, has peaked at $200, and at $90, that's a PE of under 10 times. Remember, our main market average is about 10 times today with the higher interest rate trend, but typically I like to think of the main market average as being 12 times, and I have no doubt we're going to get back to 12 times in the next 6 to 9 months as interest rates peak, and we'll talk a little bit about interest rates and how that affects PEs and how that affects the economy at the end of the program. But NCB specifically, again, for their 9 months, earnings are up, net income 18% to $48 billion. Bottom line, net profit up 86% to $25.8 billion. Net profit attributable to shareholders up similarly to $18.7 billion. So really hard to bet against these guys. Again, trading at a very reasonable PE. And when we look on the next slide and you look at the profitability, they've been impacted by the pandemic. There's been lots of impairment adjustments, lots of things happening. But here we are coming out of the pandemic, and look at the last 2 quarters, you can see that the results are improving tremendously. And if they keep this up for 2 more quarters, folks, I expect that as the PEs go back to 12 times, as the earnings come back, that this stock will be back at $150, which would be a 12 times PE in 6 to 9 months' time. So not that far away. So if you get yourself some NCB today at $90, you have the opportunity in 6 to 9 months to make 50 to 60% on your money. And again, we're going to come back here in 12 months' time, and I'm going to say, I told you so. Again, looking on the last slide, you see the graph. It's evident. The stock's coming from $133, not too long ago, and it's been trending down in recent times for reasons unbeknownst to me, because NCB is still rock solid. They just closed a $300 million raise. I think they're in good stead. Again, largest bank in Jamaica by far. So this is definitely a great buy at $90. I bought it 5 years ago at $90 and, bought more. My average is actually $100. I've been buying more to try to average down, and now I'm up to my neck full of NCB, but I have no doubt it's in my medium to long-term bucket. It's a great buy.
All right, spot on, Dan. So NCB, what I'm looking for with them is, they're starting to pay dividends again. I know a lot of people are in like a holding period, kind of waiting to see when they will start paying dividends. So I'm looking forward to that, because I really believe that the share price will move based on any news that comes out about that. As well as we see where Garden Life contributed more to the revenues and profitability, these last 2 quarters. And so expecting more growth, coming from what is essentially their insurance arm. And we also see where the heavy focus on digital services and their digital build out, and we see where Link has been improving and doing how much millions and millions in transactions, and that will continue to grow over the years as there's more adoption. NCB, the future looks really good for them, Dan.
Thanks. I couldn't agree with you more. Good deal. So keep it moving. Up next, it sounds like 3 down, 3 to go. Jamaica Broilers Group. So JPG, another one of my top 5 favorites of all time. If you're a serious stock investor, you got to have this one in your portfolio. And at $29 and a PE of 8.9 times, it's a steal. Again, below the current main market average of 10, and where we expect the market to be at 12 times. Jumping to the second slide, I want to look at their performance for the last 2 years, and you can see with the global challenges how they were struggling. But in the last 3 quarters, as we've exited through all of those challenges, you can see they're doing $1 billion per quarter. So backing up to the first slide, what has that translated into? The results we're looking at here being the 3 months ended July first quarter compared to the previous year when we had the challenges. You can see revenues up 31%, and that just flows straight through to a great bottom line performance of $1.4 billion, up 255%. EPS for the quarter, 90 cents. Trailing earnings, $3.27. And again, they have not gotten to the peak of their performance in terms of this is just 3 quarters post-pandemic, and we've got 1 more quarter to go. Also, we've heard them talking about likely to exit Haiti, a business that has not done particularly well for them, certainly in the last 3 years. I think it was just a part of their expansion, but they've decided that's not working. And I'm getting excited, hate to say that, because it reminds me of when Seprod decided to exit their loss leader, Golden Grove, I think it was, and how those numbers just changed dramatically since. In this instance, Haiti's not dragging on the profitability in a significant way, but it still isn't being adding value. So I think as they exit Haiti, as they come out of the pandemic, as they continue to grow in North America, with North America now making up over 40% of their revenues and profitability, it's a no-brainer to me that this stock will trade up to 12 times and will trade up to $35. It's just a matter of time, 6 months, 9 months, maybe 12 months, but I look forward to coming back in 12 months' time and seeing the stock at $35. Looking on the last slide, where we see how the stock has traded up and down, up and down, up and down, pretty challenging over the last 2 years. But the quarterly performance is what gives me the confidence that they're settling into a good rhythm, and that as the PEs trend back up over the next 6, 9, 12 months, as we said, because of interest rates, you're going to see the stock at $35, at least $35, probably headed more to $40 at a 12 times PE multiple. So it's just a matter of time, folks. Great buy, great company, very well positioned in Jamaica, very well positioned in North America for growth. In Jamaica, they support the tourism sector more than you can imagine, and that sector is continuing to grow. And the tourists consume 3-4 times as much as we consume as locals collectively, and so it's a good market space that they're doing well in. The only listed poultry company in Jamaica, very well capitalized, good cash, good balance sheet, strong equity position. It's really just a great company ran by a great management team. We've seen the changing of the guards from Robert Levy to now Chris Levy, and they're just doing a great job, really. Congrats to the Levys and what they're doing there, and we look forward to continued good performance. Anyone wants to comment?
Yeah, man, for sure.
Justin?
Yeah, man. And I love the point as you brought up earlier when you tied it back to the results with Seprod when they had gotten rid of Golden Grove, right? So if you even take a look back to the 2022 annual report for Jamaica Broilers, you see that that the Haiti operation currently has about a carrying value of just shy of $1 billion, 900 million thereabouts, and a share of loss of $364 million. So getting rid of Haiti is in their best interest for sure. And then that you can now focus more on the Jamaican and the US operations and really start to expand in that light. And I believe that as we get further and further throughout the situation, throughout the international geopolitical situations we have going on right now, I don't imagine it'll be lasting to this point, October next year. So once that starts to die down and wane, we can expect that the cost of inputs and the cost of productions will start to go down. The cost of oil may start to go down even further, and so that should then assist them in really generating a bit more profitability margins.
Absolutely, and again, kudos to the Jamaica Broilers team. We saw them reducing their prices, so that must be a reflection of them taking advantage of commodity price reductions that they've obviously been able to secure. And I agree with you, there's an expectation that commodity prices will come down even further, and that should improve their profitability for sure. So, great company. Go and get yourself some JPG. Up next, Dolphin Cove.
All right, so Dolphin Cove is a marine park and an adventure park for that matter, heavily linked to tourism, obviously. And let's get into the numbers. So we see we're at 6 months up to June 30th. We see where revenues are up over 135%. Obviously coming out of the pandemic, we see where there's been a lot of growth in tourism, and that is expected to continue as the numbers for this summer surpass even 2019's numbers, which was a record year for tourism for us. So Dolphin Cove's sales and revenue should continue to increase significantly for the rest of this year. We see where they're a very efficient company. They took the time during the last couple of years to really become more efficient and more lean. We'll see where their gross margins and gross profitability is excellent, right? And we see where that has now caused them to have a net profitability of over 1.8 million US, and that is a 70% increase over last year. The share price is currently at about $14.39. That gives us a PE of about 16.43 times, which on the junior market is below the current average, which is about 20 times. And so there's still room to grow into at least the average PE of the market. And as I mentioned, the growth of tourism and the growth of the amount of persons coming into the island, I expect revenue and profitability to increase. Moving on to the next slide, we see where the quarterly profit movements. We've seen where, starting from Q2 of 2021, seen a relatively consistent profitability of over $1 million US. And we see where they had that Q4 loss. That is something that is somewhat consistent in this company. That is something that you can look out for if it's linked to the tax, how they pay their taxes or how they offload some of their expenses. But we see where And there's definitely consistency outside of that Q4 in terms of profitability. Moving on to the share price movement, see where it went to a high in February of up to $29.47. And it has come down now to about $14, as I mentioned before. So it definitely share price has lost a lot of value over the last couple of months. However, I do believe that there's still value in Dolphin Cove because of the strengthening of the tourism and the amount of numbers we expect in the next couple of years. Also, Dolphin Cove is looking to expand in both Turks and Caicos and St. Lucia. They plan on building parks there over the next couple of years. They also have an agreement with a hotelier, to build on a Dolphin Cove property in Hanover, right? So, and Dolphin Cove in that arrangement will be the main attraction within that family hotel. That would also, further bode well for their revenues and sales. So, there's a lot of exciting things on the horizon for Dolphin Cove, and I expect them to benefit greatly as cruise ships, come back in full force. The Dolphin Cove offers a lot of packages to the persons on the cruise lines, at both the Falmouth and the Ochi port. So, once those things come into play, I expect much more revenue and profits coming from Dolphin Cove moving forward. Anybody wants to chime in?
Sure. Yeah, man. Yeah, Brandon. So it's definitely looking good for tourism in general, and that should definitely translate further to Dolphin Cove. As I said before, we have a lot more cruise ships coming in these days. As a matter of fact, Mr. Bartlett would have went out and did a job fair for over 10,000 Jamaicans, providing jobs for them on these same cruise lines. So I'm sure those must have been an agreement with those same cruise lines to bring back the business back to Jamaica. And if you even look at where they're situated along the lines, Dolphin Cove is definitely one of the get stops right there. It's one of the most touted and celebrated and promoted stops right there, right, which is Dunsville Falls and Dolphin Cove right there. Canada has relaxed the restrictions on travel up to recently, and as we get further and further outside of the current situation, we can expect more and more travel to take place. I believe the report recently was we had over 5 million visitors to Jamaica over the course of this year, spending over $1,000 per person. They actually brought in over $5 billion this year alone in money from tourism, right? So as things get further and further, we can expect more from there, and then the share of that will naturally trickle down over the Dolphin Cove. And that point you made earlier about the hotel is actually one of the gems that we're looking on for, right? It's a kind of up in the air right now. It hasn't really been solidified. However, should that happen, we can expect serious growth in Dolphin Cove's numbers.
All right, thanks for that, guys. Appreciate it. Keep it moving. Up next, JMMB Group.
So JMMB Group is is a broker, it's a bank, it's one of the leading financial institutions we have here in Jamaica, with one of the widest share bases in the island as far as brokerages go, right? If you look at the performance for the 3 months ended, we see that they moved up 10% in revenues, up to $11.4 billion, profits of $1.9 billion, and it actually has, I believe, the lowest, one of the lowest,
Yep.
because I believe MJE and MIL still have the crown at the moment. PE ratios, right? So with a PE ratio of 6.47 times, JMMB is definitely standing strong. They've been having some great numbers from SFC, which has provided over 40% of the net profit, of the share in net profits to JMMB, right? So even further from there, we have a lot of developments within the region. So the Dominican Republic arm that they have over there has been seeing a lot more developments. They should be rolling out their credit cards over there right now. Growth of about 21% in operational revenue, in operational profits to attributed from the Dominican arm, right? And while we're on the topic of Dominica, they recently just received approval to acquire 100% in Multiple Bell Bank in the Dominican Republic, right? So that's great news for them. As soon as they get through with that and finish and finalize the acquisition, we can expect great growth towards their revenues, great growth towards their profits. Right, great growth towards their profits. So we should be seeing a lot more from JMMB in the developments within the region, right? Okay, so once we move on over to the next slide, we can see that the quarterly profit movements, Q1 does tend to have a dip, but over the course of the year, they have been a lot stronger, especially since the with the acquisition of Sagicor Financial, right? So with continued vigor from the JMMB Group, right, in terms of the acquisitions and further movements towards there, I think JMMB is a very strong contender for one of the stocks to be performing over the course of the next, I want to say 2 years, right? When you look at the price history, since about the end of 2020 to now, it has appreciated from about $35, sitting at about $40 now, and a high of 53.10, right? So, however, this would not really reflect the actual performance of the company, which has been doing spectacular over the course of the time. But as we get further and further through the current global situation we have right now, when things might be getting a bit tight in terms of central bank increasing the rates, inflation and things, financial institutions might be looking for more cheaply priced assets and securities to invest their money in to really, keep themselves on the safe side of things. And here you have JMMB with a 6 times PE. So this is one of the things that we should be looking out for, especially as we get further and further, right? Because we're not out of the woods just yet, but it is important to keep this in mind, especially as a long-term investor.
Absolutely. Yeah. I couldn't agree with you more, Justin. And this is by far my favorite stock on the market. And I kid you not, because $75 billion market cap for a company that makes, $12 billion in profit. This is why the PE is less than 7 times compared to many other financial sector companies that are trading at 15 times, 20 times, who don't make half the profits that JMMB has made and don't demonstrate the growth potential that a JMMB has. Not only is this company, making $12 billion profit, it's a company that's been showing strong growth, great acquisitions over the last 2 or 3 years. So it's not just Sagicor Financial Corporation, it's growing in Dominica, expanding in Trinidad. So good regional strategy, showing great growth potential, great management team, and you can see the interest. You got guys like Proven taking up a 20% stake in JMMB in the last 3-4 years. And, its biggest challenge is the big float that it has. If this were a Scotia or an NCB where you had a single shareholder that owned 70-80% of it, the stock would be $60 today, folks. So it's just a matter of time. It may take a year or two before that float tightens up a little bit, but you're exactly correct, Justin. The big pension fund guys, the big institutional investors, you should be grabbing up this thing at 6-7 times PE. That's unheard of. It's undervalued by at least 40%, and they're showing good growth. So I'm going to predict we're going to come back in 12 to 15 months' time. This stock's going to be at $50, $60 easily. I mean, 3-4 years ago, they raised $14 billion at $38, and the stock is pretty much at that same price, despite its profitability growing by more than 150% during that period. So it really makes no sense to me. They're growing the profitability, but the stock price isn't moving. Part of the problem is that big float, but it's just a matter of time before we pay more attention to the fundamentals of the business and the PE and how the market works. And for large institutional investors, there are not many stocks where you can buy $100 million, $200 million worth and be able to trade it back out. It trades with very good liquidity.
That's right.
JMMB and NCB are 2 exceptional stocks in that regard. So I definitely like this one. Go out and get yourself some more JMMB for sure. It's a good medium to long-term hold for sure, no doubt. All right, up next, quick look at the equity market review. And what we have here for you is a slide that sort of shows how the main market index and junior market index have trended over the last 2 years. And I think what's good to note is that the junior market has bounced back. So we went through the challenges with the pandemic. We saw the index at a certain level, 3,500 approximately, trended down. The market was down by as much as 40%. And now the junior market is now up to over roughly about 4,000. So it's recovered and is up on average by about 23%. Unlike the main market. The main market's coming from much higher place, it's roughly 500,000. And now we see it down at 350,000. So the main market's still down by about 20. And it's because of the big guys like NCB that perhaps makes up 20% of the entire market. And JMMB and whatnot, Sagicor. So what I take from this is there's still some good gems to be found, particularly in the main market. And we caught JMMB and NCP today. But there are others. Sagicor, for instance, is also still down. And generally speaking, the main market, it's going to get back to 12 times pretty quickly. And so if you're looking for companies that have good growth potential, solid management, solid balance sheets, and you see them trading at 10 times or lower, it's a no-brainer. That's a buy for me. On the main market, on the junior market, where the average today is about 18 times, that's going to get back, I think, closer to 20 times in the next 12 months, and the same fundamentals apply. If you see a good, strong company with growth potential trading at 12 or 14 times PE, it probably means it's a buy. And if you see something trading at 50 to 60 times, then it's probably a hole and something you want to watch out for. And we see this with a lot of IPOs. They trade right up to 60 times. It's like they're trading forward 3 years on profitability. And so that's not necessarily the best time to run in on the stock. And I'm a big believer in watching the PEs. I mean, it's not sacrosanct. It's not the only thing to look at, but the PE ratio to me is your first primary signal to see whether that stock is relatively cheap or relatively expensive. And then you do your discovery afterwards to try to figure out, why is this stock relatively expensive or relatively cheap? What's the market looking for? What's it expecting? Is there something odd about the trailing earnings? That's an anomaly. They took a hit, and we know that's going to go around. It's going to self-correct, and therefore the market's trading more on a forward basis. So these are things we need to look at. And folks, if you're not sure about it, don't worry. That's why you have us here at Mayberry. Feel free to give any of our trusted advisors a call, Justin, Brandon, or the rest of the team, and we'll happily guide you through the process. We make money when you make money. That's the only way we make money here at Mayberry. And so our job is to encourage our clientele to get good stocks in their portfolio so that it can grow, and they will grow in their confidence with us in turn. Okay, up next, we want to go look at the major news to keep the program moving because we're short on time. And first up, I want to call on Brandon to talk about 2 bond raises we saw in recent times.
Yes, so we're speaking specifically to the dollar bond raise and the FESCO bond raise. We see where Kadim came on our program recently and spoke to their attempt to raise in $1 billion and how they have the ability to upsize to $1.5 billion. And just today, it was released that they're taking that opportunity to upsize, and that bond will close in and around October 18th, I believe. So we see where dollar has been showing signs of being very ambitious, and how they're going to use this for this money to further expand the business, to further capitalize the business in order to unlend monies to borrowers. And we see where FESCO is doing something similar, where they're raising $1 billion, and they will be using this capital in order to build out new locations and to go into LPG, right? Mr. Barnes, the CEO, spoke to the fact that they want to enter into cooking gas by April 2023, and it's a very capital intensive business. So these funds will help them to get all the assets needed to really make a big splash in that very competitive market, right? FESCO has already opened up 1 new location for the year. They want to aim to open up another one before this year is ended. And they said they have about 2 to 3 more within the next 18 months. So FESCO is growing, dollar is growing, and these raises are signs of such aggressive growth. And that's what we like to see here at Mayberry, companies who are really going after growth in a big way.
Yep, and both relatively new companies to the market. Both have listed within the last 6 months to 18 months. Strong growth. You see these stocks both trading at very high PEs, and here it's because the market's perceiving that they're going to be growing their profitability in a significant way. Also want to talk about some other bond raises, Justin. So we heard about Edufoco, we've heard about First Rock share buyback. You want to touch those 2 topics for me?
All right, sure. So I definitely can touch on the Edufoco raise. So Edufoco actually came to Mayberry, and we assisted them in raising 200 million Jamaican dollars at about 9.5% on the interest, right? And the purpose for it is really to pay off some debt, some related party loans and so forth, and really to expand their working capital and working towards the expansion that they have for the company, right? So they were very specific about what they're raising that money for. So I believe it's great for them, especially in this point in time. They're recently listed, they're getting a lot more visibility. They're moving out into acquisitions out in the United States. And so I'm imagining that the expansion is really to build out and deepen the roots in these different markets that they have right now. And from there, perhaps they might be even looking into another acquisition soon, right? I think Brandon can actually speak a bit more towards the first route buyback.
Yes, sure. With First Rock Buyback, they announced this early in the year that they'll be doing a buyback to unlock shareholder value. And we've seen where in the past couple of weeks, they've bought over 700,000 shares on the First Rock USD side and just over 120,000 shares in the JMD side. So that has started, and we see where the share price, especially on the USD side, has gone up relatively speaking in the last couple of weeks. And we expect that to continue to unlock shareholder value as they reduce the float on both the JMB and the USD side. So, that's good news for shareholders.
Excellent.
For sure.
Justin, what else do you want to cover for us in terms of major news?
Yeah, man, sure. I can talk more about. I spoke a little bit briefly towards the GLI certification at Supreme Ventures at earlier. Right, as I said before, one of only 2 companies in the region that have received this. Right, so it's a great move towards their technology side of things. We can also speak towards the 1-on-1 being the 100th listing on the junior on the market.
Wow.
Right. Yeah, man. Trust me. Like some years ago, we wouldn't even have half the amount of the companies we have on the market. Right. So the junior market really has unlocked a lot of value for a lot of these entrepreneurs, a lot of value for shareholders, Jamaicans in general, really giving them opportunities to invest the money and grow it in such a fast pace that really wouldn't have had a lot of access to beforehand. So it's really great, man. And trust me, man, nobody knows more than Mayberry about the benefits of the junior market and how we can assist entrepreneurs in coming here to really display. If you have a great business, if you're growing at quite a decent rate, good cash flow, good profitability, then the junior market might be a place for you, right? Sure.
Carib Cement expansion?
Carib Cement expansion, of course. So here we are right now in the last quarter of the year, and Caribbean Cement has indicated that this is about the time when they're expecting to finishing. We're not so sure exactly if they're going to be finished by the end of this quarter. However, it's great. They're going to be increasing capacity by about 30%, right? So they'll be developing more. They're going to be building out the storage. They're going to be building out the production capacity. Currently, Caribbean Cement is the #1 distributor and provider of cement in the entirety of Jamaica. So this surplus that we might be having from this might be leading towards more exports, right? So that's going to be great for them to even be paying off some US debts when they can, be earning some USD there and continue to expand operations here in Jamaica. So it's looking great for Caribbean Cement in future time once all that is said and done and the cement dust has settled.
Good deal. And then at the macro level, we want to talk a little bit about inflation, recession warning signs, and the central bank rate hikes. So we've seen both BOJ and the Feds raising interest rates by unprecedented levels in recent times. In the US, highest since 1985, I want to say, and in Jamaica, certainly the highest in quite a bit of time, over 550 basis points hike in Jamaica in the last 15 months. So again, this obviously is an attempt to slow down the economies, the purchasing power, bring back inflation in check. For Jamaica, which is a smaller economy, I've heard huge debates about it. There's no doubt that we keep mentioning there's a negative correlation between price earnings ratios and interest rates. So as interest rates go up, you're going to see the PEs trending down. Bonds become a little bit more attractive for new investors. Those who are holding bonds see the bond prices coming down on them if they have fixed rate bonds. But in general, I don't think this is something we should be worried about too much from an investor's point of view. You should be more focused on investing by asset class. So you need to have some real estate, you need to have some bonds, and you need to have some equities in your portfolio. And all you need to do is just be very smart about your investing at this point in time. I think real estate, you definitely want to be careful with residential real estate in Jamaica right now. The prices are sort of ballooning, and so you need to be smart about your real estate purchases. On the bond side, it's a good time to get some, high-yielding US dollar bonds, but you want to balance your portfolio. On the equity side, there are just great opportunities in the market. And so that's what you want to focus on, those stocks that are undervalued, trading at really low PEs, because our expectation is in the next 12 months, the interest rate hikes will end. They'll start to come back down. Inflation will come under check. That's what this high interest rate regime is about. And prices will then become relatively cheap again. PEs are going to fly, go back up as interest rates come back down. And those of you who made the good buys will see your stock values up 30, 40, 50%. This is all going to happen in the next 6 to 12 months. So all this tells me at the macroeconomic level is I want to be bullish on equities at this point in time. And if I was a bond guy, I just keep looking for good bond deals. On the real estate side, you want to be a little bit careful at this point in time because the values, the high interest rate means higher mortgages, means the demand's going to be a little bit lower. People's ability to pay the high rents, particularly in Jamaica, it's going to be a little bit challenging. So it just tells me now is a better time to be focused on equities and looking for good equity opportunities. Well, that's it, folks. That's our quick review. Brandon, Justin, really want to thank you guys for your invaluable contribution to today's program, and we really look forward to coming back next quarter and doing a similar type review where you may see some different persons. So that's it for today's discussions. I'd like to thank our viewers for tuning in. Your support is always appreciated. I'd also like to thank my fellow panelists for their insights, which have made the program really special. Be sure to look out for updates to our virtual investor forum by following us on social media. We share our live stream dates and upcoming guests on our official social media pages. So follow us for all things forum related and click the like bell to receive those notifications. Don't forget to subscribe to our YouTube channel, Mayberry Investments Limited. And remember, wise investors, slow and steady wins the race. Keep safe. Bye-bye.